Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is Monday. It's kind of the middle of August, right? The year is just going by very, very quickly. They always say the older you get, the faster time flies, right? But that's certainly what it feels like. A couple of weeks ago, I made a video and I called it 5 Outstanding Energy Stocks. You can find it in our library here at the community. If you have time, you can go back and take a look at it. It's about 20 minutes of your time that you'd need to invest. And the 5 stocks that I talked about are Occidental Petroleum, Petrobras, Devon Energy, Enbridge, Energy Transfer. And then just for what it's worth, in the library, you'll find lots and lots of videos because I've covered many of these stocks before. So very recently, I made a similar video on Devon. There's one on Occidental. Warren Buffett's still buying Occidental. Should you? And my pipes versus yours is Energy Transfer. Energy Transfer, the gift that keeps on giving. Devon Energy, discounted cash flow, if that's your jam. So lots of stuff that you can look at there. But what I want to do today is I actually want to revisit these 5 stocks very quickly, and then also share with you a couple of things that you could possibly buy. Let's just take a look here. So I made that particular video I was just referring to on July the 31st. Today is August the 14th. So 2 weeks ago, I made that video. Now, when you look at the little lines on this graph here, this spaghetti chart up here, and you can match them up to the colors on the far left side there, you can see that with the exception of Occidental Petroleum, where this big red arrow is, all the other ones have taken a bit of a dive, and some of them quite precipitously in terms of tanking, especially after earnings. Now, the reason why I made that video in the first place on July the 31st is because that particular week, 4 of these energy stocks were reporting, first Devon and then Occidental Petroleum, and then later in the week, Enbridge and Energy Transfer. They all got walloped. The only one of the 5 that was not reporting is Petrobras. But even if you look at Petrobras, which is the sort of darker orangey line here in the middle of the screen, you can see that, as I said, with the exception of Occidental Petroleum, they all took a bit of a dive. This orangey brown line here is Petrobras. So this is over the past month, though, and I'm talking about a 2-week period, and you can see over the past month, most of them have been positive, and some of them quite handsomely so, including Devon Energy and Petrobras, despite the quick knock after they had reported their earnings. How about if we compare the energy select sector, in other words, the entire sector, to the 3 main indices? So what we have here is sort of a bunched up 3 lines, which on the graph represent the Dow Jones, the NASDAQ, and the S&P 500. And then right at the top, the blue line shows you the energy sector, which of course has been on a bit of a tear of late. We're going to look at the energy sector from a macro thesis point of view in just a minute or so. I just want to get through some of these stocks. But let's take a look sort of quickly to see where they're at, where they're going according to the analysts and all that kind of good stuff. Right now, you can buy Petrobras at around $13.47. When I made the video, Petrobras was trading at $14.68, so it's down more than $1 over the past 2 weeks. The guys at TipRank, the analysts, have only got a 3 rating on Petrobras. It's an underperforming stock, according to the analysts. But hey, I know there's a number of people. There are a number of people on this in our investor community who are long in ADR and or the ADR preferreds, and maybe you can let us know what you think in terms of where it's going. Occidental has actually had the inverse of the experience that we saw there with Petrobras and some of the others too. So when I made the video, Oxy was trading at $63 and now it's trading at about $65. This was a little bit earlier today. So over the last month, it's up 10%. TipRanks has this one on a 10 outperform. So effectively, this is a situation where they're saying you're more likely to get an outperformance out of Occidental Petroleum than Petrobras, for example. Well, let's take a look at the others. So Devon, same thing here. You have a 9 outperform from the analysts. However, when I made the video, Devon was trading at $54 and now it's only trading at $50. So it's down quite a bit. So even though it's up almost 2% over the past month, it's down nearly 8% 9% over the past 2 weeks or so. And of course, this huge drop here was after earnings. The earnings actually weren't too bad. I think they missed the earnings per share with about 2 cents, and they beat on revenue, and they increased their forward guidance. So the market sometimes does funny things, right? So Enbridge similarly was at $36.80 when I made the video. Now it's down to $35.54, so it's down just over $1 per share. TipRanks has it as a 9 outperform from the analyst, but look at this huge dive that it took here on August 14th. Energy Transfer, well, this is certainly one of my favorites. This is one of my largest long positions. Reminder, you're not allowed to have a favorite, right? Anyway, when I made the video, it was trading at just over $13, and now it's trading at just under $13. And TipRanks analysts also have this one on a 9. Energy Transfer has a very, very juicy dividend as well. And they seem to not have any problem, or doesn't look like they can have any problem paying the dividends or distributions to the unit holders at all. So Energy Transfer, a nice stock to hold. It's been a sweet stock for me ever since Bulldogs recommended it, going back a couple of years now. And we managed to get into Energy Transfer at around $8 or thereabouts. So a good performer for a solid performer. Crude oil currently trading at 82.51, so it's up, and up quite significantly. It was trading at around $74 just a month ago. So a nice little uptick here. And don't forget, 2 months ago, it was about $60. What about the futures? So the September futures currently are trading at around $82.64. So this is the, as I said, September futures. And basically what that means is the traders will make merry, right? So I've said sort of tongue-in-cheek or not, a couple of times before, the largest of the oil companies on the planet are companies like Goldman Sachs and Morgan Stanley, rather than Exxon and Chevron or whatever, if you're in the US, or Saudi Aramco or whatever. It's the traders that determine the price. But take a look here, right? So in March, the energy futures were trading in sort of in the high 60s, and now we are back up to about $82. Of course, we don't know where it's going, but for now, it's looking pretty good. Over the past month or so, energy has been a top performer. If you look at the sector performance versus the S&P 500, outperformed any of the other sectors quite handsomely. Man, I'd hate to be in communication or utilities. They are lagging and have been lagging for quite some time. If you look at it over a 1-year period, though, the picture looks a little different, because remember, over the past year or so, we saw energy come down on a price per barrel basis, all the way from over 100 down to in the 60s. So almost a 50% drop before it bounced back to where it is now, with the futures trading at around $82, $83 or thereabouts. But energy has been solid, right? So even over the past year, when things were going bad, energy was kind of staying flat, and now energy has spiked again. It's doing quite well. Here's a stock that you can almost buy anytime if you don't want single stock risk, and you want to get into energy, and maybe you feel like I do that energy is going to be a consistent performer over the next few months, maybe years or so. The Energy Select Fund, which is the ticker symbol XLE, is a good buy. It removes the single stock risk, and they have a nice blend of energy stocks. I'll show you in a minute what's in the fund. You can buy for around $90 per unit or per share. And it's always important, if you're buying an ETF, which is an exchange traded fund, to know what your costs are, because someone's managing the fund for you. So you want to know that you understand right from the get-go how much this is costing you. In the case of XLE, it's not bad at all. The gross and net expense ratio is only 0.1%. So it's really cheap, relatively speaking. 0 is cheap. 0.1 is still quite cheap. The distribution yield is very handsome here at 3.7 almost. Obviously, because these are major oil companies, and many of them pay a very juicy dividend anyway. Over the past month, you can see the performance of XLE has kind of matched the price on energy. So what's in it, right? So if you do invest in XLE, as I said a minute ago, you can buy it at around $90 per share. They're not actual shares, they're ETFs, so exchange traded funds. units. What is in XLE? So zero of everything except energy. It's 100% energy. And then you could say, well, what exactly is in that prospectus of this ETF fund, this exchange traded fund? What's its top 10 holdings? Exxon and Chevron make up about 40%, 21 and 18. So there's 40% to super majors in the United States. And then the next few sort of 7 or 8 stocks, obviously this is the top 10. So the next 8 changes from time to time, as it should, because it's an actively managed fund, right? So, but these stocks together add up to about 35%. So 75% of your holdings are in respectively Exxon and Chevron, about 20 each. This changes as well over time as the stock price goes up and down. But these change quite significantly. So you can see Schlumberger is now one of the larger holdings at around 5%. A few months ago, we had companies like Occidental and Valero and Phillips at around 5%. So they've now gone down a little bit in terms of the percentage holding. But these are great companies, right? So you got Exxon, Chevron, Schlumberger, EOG Resources, ConocoPhillips, Marathon. Look at the performance of Marathon over the past year to date in terms of its return. Pioneer Natural Resources, Phillips 66, Valero, and Occidental, all great companies to invest in if you want to buy one of them because they're single stock risk, even for a super major like Exxon or Chevron, right? So even though Exxon is up a smidge over the last year, look at Chevron, it's down 8%. So if you bought Chevron, you'd be down 8.5% year to date. If you buy XLE, you're positive. So it's a nice one to buy. This is one of the stocks. I'm not recommending or suggesting this. I'm just sharing information with you. Alliance Resource Limited Partners, if you can, depending on where you are in the world, if you can invest in a master limited partnership or a limited partnership where you actually become a partner in the company, they are going to issue you a K1 for your partnership distribution that you will receive. Alliance Resource Partners Limited Partnership is a coal company, and it's predominantly thermal coal. I've been adding to this position. TipRanks has it as an 8-year outperform. You can buy it at around $20. My back of the envelope discounted cash flow calculation has the stock trading at around $25 to $30, which would probably be more fair value. You can also extract that information just at a glance from its PE ratio, which is only 3.5, right? The company is a small cap value company. It's a $2.5 billion market cap. Market cap, in case you don't remember, is the number of outstanding shares multiplied by the share price. So 127 million shares times $20. That's how you get to 2.5 billion. The PE ratio, as I said, sorry about that, 3.5. It's very, very low. So that indicates that the stock is very cheap. If you use the PE as a benchmark, remember to not only use the PE as a benchmark, because there are many other things that you should look at as well, but it certainly gives you a quick indication at a glance whether the stock is well priced or not. The PE ratio for the S&P 500 is at around 15, just over 15. So a stock with a PE ratio, which has positive earnings and is profitable with a PE ratio of 3.5, is relatively speaking cheap. Okay. Of course, it can go down from $20 to $15, and then you have to ride that wave. But it could also go up. So we don't know. The market will go up, and if it doesn't go up, it will go down. The 52-week range you can see at the bottom left here between $17 and $27. I think this is more a sort of $27 stock than a $17 stock. So it's got some run rate there. We'll see. I don't know. Nobody knows, right? Pays a huge, juicy dividend, $2.80, which currently at the stock price is yielding 14%. Nobody's really short. 0.9% of the float is short. You've got to be crazy to sell this one short. Over the past month or so, it's done really well. Alliance Resource Partners is the black line over here, and the other 3 lines are the major indices. So you can see that the performance of Alliance Resource Partners has been pretty good. Not everyone globally can hold a limited partnership from the United States because tax complications and the taxation on those units are quite severe in terms of the workload plus the cost, etc. This is an article recently posted in oilprice.com. So August the 2nd, Irina Slav is saying that $85 is just the beginning of an oil rally. We can see that Saudi Arabia, according to some of the analysts, will want to raise their production to regain some lost market share. Saudi Arabia currently produces about 14-15% of the world's global oil in terms of consumption. Goldman Sachs says the oil demand had hit a record in July, reaching 102 million barrels daily. We've been lagging a little bit and consuming just under 100 million barrels daily for the past couple of years or so, certainly post-COVID. But now we're back up to 100 million or thereabouts, which is also an interesting number because the largest consumer is the United States, consuming about 20 million barrels per day. The United States only produces about 18 million barrels per day, but it consumes about 20 million barrels per day, adding to the demand. The Bloomberg survey showed that Saudis could decide to relax the cuts by 250 to 500,000 barrels daily, starting next month, which would be in September. This is not material, but you can bet your bottom dollar if the OPEC or OPEC plus countries, or even Saudi Arabia on its own, says that they will relax their cuts. You probably can expect a buying opportunity there with oil pulling back a little. What does the global fuel mix look like? So I wanted to talk about this just from a macro point of view. It's just a couple of slides and I'm going to wrap it up. How much oil are we consuming, right? So I just talked about 100 million barrels per day, sort of oil equivalent, BOE, barrels of oil equivalent per day. This blue line here at the bottom is oil. It looks flat, but it's actually slowly edging up over time. This green line here is coal. It's also sort of flatlining or thereabouts. And the next one is natural gas. And then you got hydro, and then you got nuclear. And then at the top, you have this fast-growing segment, which is renewable. But remember, it's easy to grow in percentage terms when you're growing from nothing. So in terms of renewables, that market is still relatively small. So you do have a window of opportunity, which is not months, it's years, where you can actually still extract some good returns from oil and gas in general, sort of from a macro thesis point of view. If we take a look back and look forward, I dropped in this little description here in terms of exajoules that is being consumed currently, so sort of 2022, compared to 10 years prior, and then 5 years looking ahead. So the renewable sort of energy consumption is expected to grow quite significantly. But remember, it's easy to grow when you're growing from a really, really small number. And what I mean by that is, if you start a new business and in the first month you make $100, and then in the second month or year or whatever you make $200, you've just grown 100%, right? But that's because you only grew from $100. So it's easy to achieve phenomenal growth when your basis is really, really low. It's very difficult to achieve meaningful growth when you have a very, very large number, right? So if your company is producing, $20 billion in revenue per year, you'd be very satisfied if it grows 5% and it starts producing $21 billion. Whereas if your company is producing $1 million, you might easily get to $2 million, which is 100%, right? So the percentages are somewhat a little deceptive when you look at these numbers. But renewable, of course, it's growing. Governments across the world are dumping billions and sometimes even trillions of dollars into renewables. So of course you expect growth, right? Hydro and nuclear in 2012 was contributing 59% in terms of energy consumption. Right now it's sort of around 64%, and it's expected to increase to about 67%. How about fossil fuels? 10 years ago, about 455, now 494. And 497 on a go-forward basis. So when you look at these numbers, you can say, well, we have renewables here. So 80 out of 646 is about 12% or so. And hydro and nuclear is close to 10, 67 out of 646. And then fossil fuels, 500 out of 646. It's actually slowly edging up. And one of the reasons for that is that as the world's population is becoming wealthier because of fossil fuels lifting people out of poverty, their demands for energy also increase all the time. And as a result, there's more demand for fossil fuels, hydro and nuclear, regardless of the fact that the renewables are just roaring ahead in terms of consumption. what does this look like on a bar chart? And I'm going to wrap it up here. So global energy consumption over the past 20 years, right? 2000 to 2021. Now, of course, this graph is going to change over the next 20 years, but we're looking at where we are today. So when you look at coal, slight difference there, oil, a slight difference there, natural gas up slightly per year, and then nuclear, these numbers are sort of stuck at around 1, except for natural gas, 2.5% per year in terms of consumption. All the others growing slightly positive or slightly negative. The pandemic had a huge impact here on coal and oil, but it's recovering now. And here's the example that I'm using for renewables, right? So it's growing at 16% per year, which is huge, but the basis is so low, right? I dropped in this little description here just to give you an indication of where we're at, right? So 940 million, which is 13% of the world's population, do not have access to electricity. There's no way, it's almost 1 billion people, right? 13% of the world's population. There's no way that this can supply electricity to that 1 billion people. The other important point here is that 3 billion people, 40% of the world, do not have access to clean fuels for cooking. And this comes at a high health cost for indoor air pollution. There are many people around the world who are actually literally making a fire every day to cook food, right? So don't ignore for a minute that there's almost 1 million people who still do not have access to electricity. Those people are going to be lifted out of poverty because of oil and gas, not because of renewables, not for the foreseeable future. This might be very, very different, in 2100 and beyond. But for the next, 30, 50, 60, 80 years, there's not going to be a significant drop-off in terms of oil consumption as we know it today, despite the high growth that we get in renewables, because the demand is ever increasing. And for now, when I say for now, I mean sort of during our lifetimes, that gap is going to be plugged by coal, oil, and natural gas. So guys, that's kind of a little overview here. I did want to revisit those stocks because I said they were 5 outstanding stocks and all of them tanked. Well, not all, not Petrobras, right? Petrobras pulled back a little all by itself. The other 4 tanked immediately after they had announced their earnings. And of course, the market is very volatile today. So if you come up with a bad number, you just get beat up, right? But I did want to revisit it because I said there were outstanding energy stocks. They are still outstanding energy stocks, with the exception of Petrobras, which has got a 3 rating on tip ranks, underperformed. The other 4 all have a 9 or a 10 outperform rating based on the analysts, right? So hopefully they are correct, and hopefully you are long in some of these, and you've benefited from the uptick that we've had in energy prices over the last few weeks and months or so. On that note, this is Rudy signing off. Thanks for watching. I'll talk to you again soon. Bye-bye.